Hello and welcome. This is the Bowie Business Recovery Roundtable, Business Counseling Resources and Financing Options. My name is Lisa Smith. I'm the Executive Director of the Bowie Business Innovation Center, Business Acceleration Hub for Prince George's County and Bowie businesses located on the campus of Bowie State University. This roundtable is part of an 8-month series of business assistance programs and technical assistance activities for Bowie businesses. And it is a collaboration with the Greater Bowie Chamber of Commerce. And this project is designed specifically to help companies accelerate their economic growth as they emerge from the pandemic. This project is funded by the City of Bowie. So we have a very special treat today because where we typically have a single speaker, we actually have a super panel you're going to be hearing from today. During the session, you'll be hearing from 3 of the finest professional counselors that in my 25 years of working with business incubation and entrepreneurship, I've ever worked with. And so it is going to be with great pleasure that you may know some of these folks, you may have met with them before, but as we're getting our heads around what happens next, I just want to remind you that these are some special resources. So we're going to be hearing from Angie Duncanson, who's the Senior Business Counselor and Trainer with the Maryland Women's Business Center. We're going to hear from Mark Wells, Senior Business Counselor with the Small Business Development Center. And we're going to hear from Eddie Tuvin, who is the Chief Lending Officer for FSC First here in Prince George's County. Today's presentation will be emailed to registrants, and we are looking forward to getting your questions, so feel free to post those in the chat box. We'll take those after the session has kind of gone through its paces. Just want to encourage you to not be shy about asking questions that you've been kind of maybe thinking about during the pandemic. Now is the time really to kind of get out there and ask those questions. This recording will be available also on the BowieBusinessRecovery.com website, so that if you want to listen to it again or you want to refer it to a friend, feel free to do that. So I think I've said enough, and so I think we should get started because we have a lot of ground to cover. And I'm just going to say first over to you, Angie Duncanson. Thank you very much, Angie.
You're welcome, Lisa. Thank you, Lisa and Crystal. And it's really great to hear and see all of you that have joined us today. Now, I just got to preface this presentation with the fact that everybody is online at the same time. Everybody is Zooming at the same time. And I do a lot of training this way. So sometimes the presentation will freeze. So here's a business tip. If you're ever making a presentation, always make sure you have a hard copy of it, because we're not going to let technology stop us. So if something happens with us today, I do have a hard copy. I can continue, and you all can also get a copy of the presentation. But that's a sidebar. Always make sure you have a hard copy of your presentation. I've learned that over the years. So I'm going to start sharing my screen now, and we hope everything will work out just fine. Okay, so this presentation is short. There aren't very many slides in it, but what we want to talk about today is business counseling to accelerate your business recovery in this so-called new normal that we're living in. So I just want to share a few things with you. See, already this thing has stopped. I can't move. So let's try to get out of this and come back in again. Okay, share my screen again. Now, I may have to keep it in this presentation mode because for some reason, is it moving now?
Yes.
Right. That's what I was telling you earlier, Lisa. It won't move in the presentation format, so I'll have to keep it in this outline format. Okay.
Okay.
All right. So the Maryland Women's Business Center works with entrepreneurs across Maryland's capital region, which is Prince George's County, Frederick, and Montgomery County. And through our resources, we encourage women to start, sustain, and grow their businesses. And that's what we want to talk about today, sustainability and growth. So through our workshops, individual counseling, facilitated peer group support and special resources and access to capital, we've been able to annually help more than 1,500 women gain the skills, connections, and confidence necessary to navigate entrepreneurship. So what is it that we do? We encourage women to take the steps that will lead to their success by helping them to figure out how to hire their first employee, obtain micro loans and financing that will help them grow, look for suitable and manageable office space beyond their homes, build a network and connections to reduce their isolation, and we help them to develop a business plan that will result in their growth, stability, and independence. So as I go through this presentation, please begin to collect your questions and place them in the chat. And when that time comes about, I will certainly address your questions. So, growing your business. Maryland Women's Business Center offers resources to help you take your business to the next level. From funding options and learning about certification criteria for women-owned, minority, and disadvantaged businesses, to finding office space, developing human resource policies and staffing. So see the links on our website under our counseling tab that will provide information to help you grow and sustain your business. I didn't want to put all those links in this presentation. So if you go to our website, www.marylandwbc.org, click on our counseling tab, and then you'll see a host of links for various resources to help you grow your business. So how can Maryland Women's Business Center help you facilitate your business growth? So I am speaking to you now from a counselor's perspective, and particularly from my perspective as a counselor for Prince George's County. I am the Maryland Women's Business Center counselor for Prince George's County. So how can I help you facilitate your business growth? So these are some of the things I want you to think about, and these are some of the things I would counsel you on if you were counseling with me. The first thing is, if you want to grow your business, you have to ensure that your corporate house is in order. And what do I mean by that? I mean, are you working with the following professionals? Are you working with a banker, an accountant, and preferably a CPA, a certified public accountant? Because if the accountant's not certified, they really can't certify certain documents that you may need certifying. I mean, it's great to work with an accountant. If you know, that's great. At least you'll be working with an accountant, but we would prefer that it would be a certified public accountant. So are you working with the banker? Are you working with an accountant? Are you working with an insurance agent? And are you working with the lawyer? If you take the first letter from all of that, we call it your BAIL team: banker, accountant, insurance agent, and lawyer. These are your professional advisors, and you cannot sustain or grow a business if you do not have these professionals in your business life. Sure, Mark and I, we can counsel on a lot of things, but we're not professional insurance providers. We're not lawyers. We're not accountants. So you need these professional people in your life. We have a vetted referral service, and we can help you obtain these professional advisors if you need them. 2, if you want to grow your business, you have to make sure that your accounting procedures and practices are in place, that they're accurate, and that they are consistent. That means you got to file your taxes on time. You have to file all back taxes. You should even file taxes every year, whether income was made or not. This helps you keep a record for each year, because lenders and contracting officers and others may want to see several yearly records to see how revenue has improved. So if, for instance, if you're into government contracting and you made great revenue in 2019, but didn't in 2020 because of the pandemic, but now this is 2021, they want to see those 3 years, 19, 20, and 21. And then you can show them, look, I was making great money in 29. The pandemic struck in 20, so I didn't make as much. Now I'm on the recovery in 2021. And this will sell your case in some instances with lenders and with contracting officers and with others. It will show them the fortitude, the tenacity, the wherewithal, the stick-to-itiveness that you have as a company, as an organization. Hey, I was down in 2020, but I'm back up now. And you really need to file taxes yearly, whether you make money or not, because you need a paper trail. You need to keep a paper trail. So that will help you grow your business as well. You also want to make sure you have the necessary tools in your business toolkit to be in business and to grow a successful business. You can't expect to be successful and grow if you don't have the right equipment, tools, and seeds needed to plant. So what are your business systems? Do you have reliable information technology that's secure and supported by a professional IT consultant? If so, are you performing yearly checkups? Are you engaging in new technologies when needed? Or are you simply relying on outdated stuff and thereby standing still and hoping things will work out? Then you wonder, why aren't you competitive? So sure, these things, they take money, but to be in business in general takes money and more money to remain and grow a business. So what are your systems? What are your tools? What are your methods? Are you checking up on these things? Do you have professionals providing the assistance that you need in order to keep these systems viable? But you got to have systems if you plan on growing your business. How are you marketing your business? Are you using the latest marketing techniques? Do you have a current website? Do you have a social media presence? Do you have the best marketing materials? Are you working with a professional marketing person? If not, we can make a referral. Are you doing your own marketing? Is that a good idea? Are you an expert at it? If not, we suggest you get professional help. You can't rely on old-fashioned marketing methods. You must have marketing know-how and be electronically in tune with today's electronic online marketing arena. If not, you will be at a disadvantage and less competitive. Do you have a marketing plan? If not, why not? How are you transacting business monetarily? Do you accept checks, credit cards, cash, electronic transfers? What? Do you check up on these systems periodically? Who's managing this business process for you? Yeah, it's a lot. Being in business is a lot. And if you want to stay competitive and grow your business, you have to implore some of this information we're discussing right now. It's critical. So how can Maryland Women's Business Center help you facilitate your business growth? If you don't know the answer to these questions I just posed, you should. Are you reporting to the local, state, and federal government if required to? Are you keeping administrative records of reports and normal business information? How are you handling needed personnel requirements? Do you have access to HR assistance? If not, we can make a referral. Have you created an employee handbook if you have employees? Have employees been given an orientation? Are they aware of your IT, email, and internet policies? If you're a government contractor, for instance, or a staffing business, do you have a current roster of potential employees, 1099 or otherwise? Or do you plan to try and staff a contract once you win it or at a moment's notice? How do you run a staffing business without a stable of employees? You can't. You must think ahead. If you're a government contractor, have you worked with Maryland's Procurement Technical Assistance Center, PTAC? Have you researched and studied the needs of the 3 to 4 entities you want to do business with? Are you aware of their procurement processes? Do you have upfront funding to mobilize a contract? Do you have past performance? These things aren't going to just jump in your lap. They don't happen by osmosis. You've got to really, look at your systems and look at the processes that are necessary. So in summary, because I've said a lot, and we can have a lot of discussion and a lot of questions from what I've just said. But in summary, it takes work and concentrated efforts to grow your business. Maryland Women's Business Center is here to assist with business growth. Running and growing a business is a lifelong effort and learning process. You won't know everything, but you should know a lot. Get professional help with what you don't know. And last, be prepared to deal with this pandemic and new normal for the duration. And that's it for me, Lisa.
Thank you very much, Angie. And you did give everybody an awful lot to think about. If there are, I don't see any questions specifically for Angie at the moment because people are kind of like mulling it a little bit.
Hey, Lisa, one thing else I wanted to say, if I can just conclude, because I thought FSC might say this, but let me just say that I got this information from FSC a while back, and I want to end by saying this. FSC and the Maryland Women's Business Center and the Bowie BIC and SBDC, all of us, we encourage you to take this time to devise a turnaround plan for sustainability. Reevaluate your customers' needs, update your corporate documents, automate your financial records, and by all means, maintain your good credit score. Because how business is done in the future will be dramatically different after COVID-19. Everything must change. Okay.
I think that is a great philosophy to live by, great words to live by. And that was part of what was behind this whole series of technical business assistance workshops and one-on-ones that we've been working with the Bowie community about since January. So yes, we need to be equipped. We don't really know what's coming. We know it's going to be different. And for businesses to be successful, they're going to need to be flexible and thorough. So thank you, Angie, very much. And I know you're going to get some questions in a couple of minutes here. I want to turn the microphone over to Mr. Mark Wells from the Small Business Development Center, who, like Angie, has been located with Bowie BIC for many years and has done provided extraordinary support for our small businesses, our emerging businesses. And Mr. Wells, if you would just kind of take us from here into the Small Business Development Center world, because where Angie works exclusively with women, you work with all of our small businesses here in Prince George's County and the city of Bowie.
Thank you, Lisa. And thank you for inviting me, you and Crystal. I really appreciate it. It's good to see coworkers and friends again. Unfortunately, we can't see you in person, but I'm glad to be here. Now, thank you, Crystal, for putting that up. What we do is very similar to some of the things that Angie does, but sometimes we get down in the weeds a little more, and we also have subject matter experts, of which I'm one. So we start off with startup assistance, very fundamental things that you do, registering your business as an LLC or a corporation or whatever your business need is for that type of registration. We do business plans. I evaluate them, send them back to you, make sure that you're on point with the SBA guidelines. Networking opportunities. Oh, we have a lot of networking opportunities that come. Some of them come from the Bowie BIC, but there's so many other companies that we use that we can help you with your networking opportunities. Financial analysis. That is one of my subject matter experts. So we will look at your cash flow, your collateral, the type of loan that you're getting, and all of those things from a consulting standpoint and from a subject matter expert standpoint. The consulting that we offer is not just me, it's 50 of me in the state of Maryland. And each one of them have a subject matter expert. So I don't have to go very far to find someone that can assist you. We also do certifications, 8A certification, NBE, DBE certification, and to make sure that you have as many feathers in your cap as you possibly can to get an opportunity. We do federal and state contracting assistance. What that means is if you get a contract and you don't know where you're going, we also have the ability to talk to our sister company, which is PTAP, which is a procurement organization. It helps you with your fundamentals and bidding on contracts and things of that nature. We also have, when we go back to subject matter experts again, specialize in restaurant assistance. We have an individual for every county that specializes in restaurant assistance. So if you're having a client that's having some difficulties, especially with the pandemic, we turn you over to him and see if we can work out something that helps you continue to grow your business. Strategic planning and loan packaging. Well, I'll say loan packaging first. Loan packaging is probably one of my expertise. And I put together, since I've been here, I don't know, hundreds of loan packaging, but I come from a banking background and 30 years in banking, mostly in commercial lending and small business lending. Strategic planning, a lot of people don't look down the road. Where are you going to be in 3 years? And this is what we really ask in your business plan. Where are you going to be? What type of financial forecasts are you forecasting for yourself? And so to see that you have a plan that is doable, that is conservative. So if you do better, it's great. But if you come up with a plan that has grand planning, a lot of times banks and anybody else is certifying you, or government and agencies that are looking at you, they're going to say, wow, he's predicting that he's going to make $500,000 in his first year of business, which is, I mean, some people have done it, but most of the time it's unlikely. Demographics is really important, especially for your restaurants. If you put your restaurant, I had an individual to put a steakhouse behind another steakhouse, and a steakhouse that was already there was much cheaper than his. And so unfortunately, he went out of business. So you have to really look at your demographics. How many people, it's like 50 restaurants in Prince George's County is the area that I cover, which I didn't mention at first, but that is the area that I cover. And so if you're opening up a barbershop or something of that nature, it's a lot of barbershops in Prince George's County. So you have to take that into consideration. Technical commercialization. We have so many technical people in-house that I can refer you to that have come from IBM and places like that can really help you with what you're doing. We also have the assistance of TEDCO, which is a technical evaluation and has potential to give you some money behind that. Import-export. We have an import-export specialist that's out of Baltimore, and he's certified as an import-export specialist. And then again, becomes a referral from me if that's what kind of business that you're in. And of course, business evaluations. I look at your business and say, is it viable to what you're going to do? If you're doing something that is really not in this marketplace, let's say that the type of restaurant may not fit in a particular neighborhood, and because that neighborhood is not catering to that kind of business. So if you don't realize that, we have people that here, we're connected with Maryland University that will research your opportunity and make sure that it's a viable one. So now I'm kind of going to move on into my expertise. And if Crystal, you could patch me over to my presentation and drop down to number 6. I'm going to skip all the things that we started before because that was in general talking about what we do. But now I'm going to talk about my subject matter expert. And if you jump down to number 6, because then we can skip over the things that we just talked about, and that's understanding your lenders. This is an important thing when you're in finance, because all lenders are not the same, and all lenders are not trying to do the same things. If we're talking about fundamental things, they want regular monthly payments and hard assets and extremely risk adverse. That's really important, because no lender out there wants anything that's going to be risky. They're not going to go. So you got to think about that when you're going into business. If you're going into business that's something risky, I hate to say this, but restaurants have like a 60% failure ratio within the first 2 years. So they not only have to have a good product, but you're going to have to know how to manage that product. And you know that banks are not really willing to take a risk. There's some banks that don't lend to restaurants at all. So you have to know what bank you're going to. Now let's drop down to number 9. I'm sorry, I meant to say number 10. So number 10, understanding your lenders, the type of lenders. Some banks are fee-based banks. So they're not really interested in lending as much as they are because they don't make as much money as they do on fees. So you have to know what type of bank. I probably work for 5 or 6 banks in this area. So I kind of know the larger the bank, the more they kind of lean towards fees. Now, in the lending rate, the current prime rate may be around 4%. But if you're going to different, higher the risk, the more the rate. So you're financing a supermarket or a restaurant, you might not get the same rate that the guy is financing a dental office or some other professional organization that kind of falls along those lines. But you're looking at maybe 3-4% more. Okay, Crystal, let's drop down to the next one, which is who are the lenders? Okay. Now this is where we really come in. Drop down to number 12, please, Crystal. The lenders are different national and regional banks. When you look at a national bank, you're talking about the SunTrusts, the BB&Ts, and those are larger banks. Community banks sometimes are more inclined to lend in the community, especially when you're a small business or mom and pop kind of shop. So you have to take them into consideration and what their expertise is. There's a bank that's in our community that doesn't lend to liquor stores because of what their origin was more based on religion. There's credit unions now. Credit unions you want to go to from a commercial standpoint, a lot of credit unions are lending just on real estate. They really don't have the ability to lend from a commercial standpoint. You know what I mean by that? When they're not going to lend on equipment, they're not going to lend on financing a line of credit and those kind of things. So you have to think about credit unions are really based on more retail lending. And so they'll lend on an apartment building because the evaluation of an apartment building is night and day from evaluation of commercial property. Because an apartment building, if it has 90% occupancy and it's got 10 tenants in there, 9 times out of 10, it's going to be able to pay the mortgage. So they're more inclined to lend to you on real estate. Then there's micro lenders. We got a lot of micro lenders now. I look at one of the credit unions that I think is a good micro lender is Navy Federal. Navy Federal will lend a startup because you're military, or lending a startup because your personal income is in line with being able to pay the small debt. So there are micro lenders out there, and there are also alternative lenders, which are not banks, and they will take a company. Maybe you're not quite bank ready and you need some hands-on help. And there are companies out there that we can refer you to in that way. And then there's a few out there that do equipment lending. Now, most of the time when you're talking about equipment lending, especially when you're talking about construction equipment, you're going to probably have to go with the manufacturer. And the manufacturer's getting their money from the bank, so the rate is a lot more. But the other situation with that is that there is a few credit unions out here that will do equipment lending. And so if when you contact us and you want to know which one that is, we can point you in the right direction. And then real estate lenders. Of course, most of the time when you're dealing with real estate, there's a particular lender out there that does just real estate. So we'll point you in that direction too, because everybody's not going to finance land. Now, if you're looking for somebody to finance your inventory, a lot of times that comes back to your suppliers, because your suppliers are the ones that say they're making what you make. And so they're getting their money from the bank and they're willing to extend credit to you in order for you to, get their supplies. And we have one client in particular, it was a liquor store, and he was able to buy from his supplier, twice the amount, because they're supplying the beer to him and they knew that he would repay it within 30 days. So these suppliers are very important. Okay, Crystal, can we go to the next one? I believe it's number 13. Now here's a list of the lenders. Now I haven't updated this list, but you can look through this list and see who the micro lenders are, the factoring companies. I'm not a big fan of the factoring companies. Now, if I have to, I'll send you in that direction. But factoring companies usually take a pretty good portion of your profits, and that can be up to 20%. And a lot of business, that's all of their profits. But a lot of times when you're not bankable, you have to go with a factoring company, but it's not someone I would recommend. And I talked about the equipment financing, and a lot of times you get state agencies that will give you a grant or something similar to that. I've listed Money One and is an equipment lender, is a credit union. Navy Federal is another, it's a micro lender. And I'm not a big fan if you're a startup of going after national banks, because they're not normally going to, you need to stick with the micro lenders until you build up enough years behind you to go with a national bank. Okay, can we go to number 14? Types of financing. Well, mostly banks only deal with working capital. That's usually a line of credit. Credit cards and things of that nature, you can just about get them at any bank, but it depends on what your needs are. If you need more technology based around your credit card, you might want to go to a larger bank. If you can go to a smaller bank, a lot of smaller banks, they run their credit card structure through a larger bank. And then there are banks that, if you're doing a bridge loan, that usually is around construction. And a construction loan, and you have to also investigate the bank that's doing the construction loan, because if you go to a bank that's not really doing construction loans, then you're wasting your time. And supplies, I just talked about that earlier. Suppliers of trade lines of credit, contract financing is factoring. Kind of repeating ourselves there in that aspect. Long-term loans, equipment loans, and real estate loans. Well, very seldom you're going to get a long-term equipment loan. Real estate loans, yes, you can, and most of the time in commercial banking, it's only going to be up to 20 years. But equipment loans, because they're only going to give you the life of the equipment, and most equipment is not going to go past 10 years. So you have to take that into consideration. You're buying a tractor trailer or something that costs $120,000, you're only going to get 10 years on that. And of course, we talked about micro loans, the short-term and long-term loans, but in micro loans, they're not going to, most of those are not, a long-term micro loan might be 5 to 7 years. Okay, Crystal, we can move on down. In fact, we're talking about loan approval. Skip on down to number 16 for me, please. Okay, loan policies in banks vary from bank to bank, and so does acceptance of credit scores. And when you're talking about a credit score, some bank might take 680, other banks may only take 720. So you want to make sure that you understand that what kind of bank you're going with. Most of the time when you're talking about a smaller bank, they're more inclined to operate above 680, but they'll take you as low as 680 is what I meant to say. And of course, the cash flow analysis, and depending on if a bank has loan committees and don't have the ability that affects the turnaround time. If they have to go before, and you get that a lot with small banks. If you need a fast turnaround and you go to a smaller bank, you can expect it's most of the time it's going to take more than 30 days. Now, it's from a micro lending standpoint, I know that but the larger organizations can turn that around in under 10 days. So keep that in mind when you're dealing with it. You have an expectation. A lot of people, they wait till they need the money and they need a quick turnaround. That's a problem. You want to go after the lines of credit and things when you don't need the money. So that'll be in place for when you do need it. And the quality of your own application. Of course, if you give a loan application that looked like you took 15 minutes to fill it out, that's not going anywhere. You want to put as much time in your loan application as you want in return from the money. So if you sit down and think about all the things that might be a problem for this application and address them before the application is sent in, then that would be a much more viable response than you would think. Okay, we can jump down to number 16. I'm sorry, 17. Okay, so you know the credit reporting agencies, most of the time in the East Coast is Equifax, Experian, and they vary from one to one, because I recommend that you get your credit scores in all three of these agencies before you even submit anything to a bank, so you know where there's something that you might need to address. So, and I also recommend that you monitor your credit report at least once a quarter, if not every 6 months. Okay. Number 18, please. Okay, let's qualify your business credit. We step down to number 19. How strong is your credit score? Of course, if your credit score is 300, you're not going to get a loan. And 850 is as large as you can get. And we just discussed that. If you're above 680, that's a good thing. Understand the bank requirements and qualifications. Most of the time when you're talking about a commercial loan, the bank will give you a list of things that they want you to produce, tax returns and so forth. And personal financial statements and personal documents, have a concise business plan, provide the quality of capital. I can't see that all the way. Can you move that over a little bit? Number 5. Well, anyway, what they're asking you to do is put together a loan package. And that's one of the things that we can help you with. Almost every counselor in the state of Maryland has the ability to put together a loan package. So let's go to number 21. And these are the basic 5 C's of credit. Everybody knows them, should know them if you're looking at a loan. Of course, character, what does that mean? They're not going to lend to an institution or business that might be dealing with something that's marginal. I don't think banks are lending to cannabis right now, shops. And that's because the feds are not backing, but you have to know that if you're going into a cannabis shop, you have to deal all in cash. And there are other organizations that they won't lend to. And capacity, what does that mean? That means that you have the ability, the historical ability to pay a loan. So I'll use an example of Popeye's Chicken. They were one of my accounts in years past, and this guy was able to reproduce that ability to pay a loan based on the demographics in the store and what was going on. He did it 10 times over. So he has sufficient history. Now you go into a situation where you don't have that capacity, which is really a lot in startups. They're going to lean more on your personal ability. And of course, they're looking for capital injection. Most of the time, if it's commercial property, they want 20% down and sometimes 30%. Collateral. They like fixed assets. Nobody likes it better than a bank if you have brick and mortar. The other fixed assets may be something that is a large vehicle or something that has a serial number on it. They can attack a value to it. Equipment, it depends. Like I say, there's special lenders that are dealing on equipment, and accounts receivable where they used to years ago would take up to 80% of the accounts receivable as collateral. I think that's probably reduced now to under 60%. So, but that's usually when you're talking about a line of credit. Okay. Conditions. Well, nothing more of a condition right now than the pandemic. That is a condition that has really turned a lot of businesses upside down. So businesses that can't change, and like Angie said, you got to be ready for change. If you don't have the ability to change, I think all the restaurants that I'm dealing with in Prince George's County that were able to kind of sidestep this issue and bring their business outside or address something in delivery. I have caterers that turn into delivery, which we recommended that they do, and which helped them survive the pandemic. Okay, let's go to number 22. Okay. Well, this again is addressing the 5 C's of credit. Cash is always great if you have that as collateral, and accounts receivable, they say up to 80%, but I don't think so now. Inventory, 50%. Now, that depends on what kind of inventory it is. If it's, something that is viable, if it's computers or something of that nature, you're looking at about 50%. Machinery and equipment, 60 to 100%. Real estate, 65%, and commercial real estate up to 90%. But that's only with a particular kind of loan. Most of the time, if it's 90%, it's going to be an SBA loan. Okay. U.S. Treasury bonds, vehicles, we talked about this. Not collectibles and no IT equipment. That means if they're not taking Xerox equipment as a collateral. Okay, let's go to 23. I sound like Warner Wolf. Remember that guy used to say, let's go to the videotape. But, okay, commercial lending. Lenders will analyze economic conditions in your market. And I've talked about that earlier. If you don't know the economic conditions in your market, your business could fail miserably. Because if you're going into where there's a tremendous amount of competition and you don't have a niche and you clearly can't prove the niche, a lot of times, even if you do get a loan from the bank, then you're destined for failure if you don't understand what's going on with your demographics. Okay, let's go down to the next one, which is how do you leverage a good credit? 24. And so now to 25. Okay, how do you leverage a good credit? Well, you have a bargaining chip when you have good credit. You're stepping to the table and the guy says, well, I'm only going to give you 5%, and you know that prime is at 3%. You can say, well, look, I want 4% because I got an 800 credit score. And believe me, I have a daughter that's gone into dealerships and drove them crazy because she wouldn't take what they gave her in a car because she knew she had a really great credit score, and she listened to me. So let's go to number 26. Okay, we're going to review your next steps and workshop review. And we don't necessarily have to do this because this is a short version of what we're doing, but go to 27. And we'll just kind of go over what we talked about: good character, credit score, sufficient cash flow, owner cash injection, sufficient collateral, and really understanding what collateral is, an excellent business plan, and good historical cash flow. Because if you're back, what are they talking about? And I don't know if I touched on this. Historical cash flow. If your cash flow was 500,000 one year, 250 the next, and 500 the next year, that's really kind of makes the lender look at you and say, what's going on? Why is he going up and down like this? Now, you got a built-in excuse with the pandemic, but a lot of times when your business, sometimes if your business is out of touch, you can have that historical cash flow that is not correct. And of course, we always got to be in good standings. That's one of the big things that I have, and especially in startups, that after the first year, they're not in good standings anymore, and they have to do that every year. They have to renew that opportunity to stay in good standings, because no bank and nobody will certify you if you're not in good standings, because that means that maybe you didn't pay your taxes or maybe you have a lien against you. Okay, number 28. Okay, this is, I'm almost think this is a common sense thing, but next step, you want to talk to your family, you want to analyze the equity and financing needs and thoroughly prepare your business plan. All of those things that we do, help you do. So we look at that as, I almost looked at as that as like common sense to starting a business. Let's go to 29. Okay. This is back to us. We offer a lot of classes. In fact, I teach this class. It's financing class. We offer Ready, Set, Go, which is the fundamentals of starting a business. Smart Start, 4-hour class. We give you a banker. We give you an attorney and an accountant. And like Angie said, an accountant that's a certified accountant. And we give you a finance individual. Sometimes that's an individual from the outside, and sometimes it's me. Writing a business plan. I don't know how many business plans that I think everybody that I've had to review that didn't follow the writing a successful business plan. You can easily get this from that course. And of course, how and where we're getting financing. I think we've changed the name to the benefits of financing, but it's the same thing. And we have several people that teach that class. We have about 10 people that have over 30 years experience, including myself, that teach the financing class. Operating a business, social media marketing classes with digital marketing. We have QuickBooks classes, certification classes. Now I talk about the 3 main certifications, which is NBE, DBE, and 8A, but there's so many other certifications that you can get depending on what field you're in. and how to hire employees. I got tons of HR referrals that I can give you to tell you how to hire an employee, but you take this course and one of those people will probably be teaching it. And growing a business, 8A and MBE, DBE certification, CEO Accelerator, and Growth Accelerator. The more feathers you have in your cap, the more certifications that you have, the better off you will be, the more marketed you'll be, the financing and all the other things that come along with that. Because it's more marketable you'll be on Sam's list, the more marketable you'll be in reference to somebody giving you a grant on your business, because they say that we're going to give this person a grant because they cover all the bases. One of my biggest opportunity, the guy got a contract because he was 8A certified and he was a woman-owned business, and he was, I say he, well, he was running the business, but his wife was 51% owner. But all of those things make you much more marketable for your business and yourself. And I think that concludes it. Number 30, and I hope I didn't take too long. I'm talking really fast because I was trying to get through it as our contact information, which will change soon. But if you have any questions, just put it in the chat room and I'll be glad to answer.
Yeah. Mark, that's absolutely fabulous. And you kind of opened the door for me to just remind everyone who's listening that both Angie and Mark are professional counselors associated with the Bowie Business Innovation Center, have been for years. I'm hoping this will continue for more years. But everyone who's registered for this event will be added to our distribution list. So as we promote the training opportunities at WBC and also SBDC, you'll be getting notification about that. So we'll try and help you stay connected going forward here. But Mark, thank you very much for doing all that. I'm gonna kind of go in with the continue on the financing piece of this. Our third speaker, Eddie Tuvin, was unexpectedly unable to be with us today. But what he's done is he has left me with a really nice little video with some slides of him and him explaining them that I am going to share with you now. And so I'm just going to say, take it away, Eddie.
Hi, I'm Eddie Tuvin. I'm the Chief Lending Officer of FSC First here in Prince George's County. And I'm delighted that you've joined us for our session, Business Counseling and Financing Resources to Accelerate Your Business Recovery. We've been through a lot, and we're still here, and we're still standing. At the beginning of the pandemic, Prince George's County had the most new jobs created in the state of Maryland. It wasn't long, we lost them all. So we're ready to rebuild now. Let me share my screen and go over exactly who we are and what we do and how we might be able to help someone. I've been doing this for about 30 years, and specifically within the Small Business Administration loan programs that are available for owner-occupied real estate acquisition and for business acquisition and for major purchases for the most part. We do not fund investment properties, anything to do with religion, sex, or gambling by order of the United States Congress, which oversees the SOP, the Standard Operating Procedure, for everything SBA. Our company is 12 strong. We are majority woman and we are majority minority. And we're located right in Largo and provide assistance to the state of Maryland, several counties and cities, as well as some other organizations that provide us with funds and access to assist in the administration, distribution, and monitoring of those funds. So a couple things before you go to a lender and before they pass that I think are really, really important. One is you really need to know what your debt service coverage ratio is and what that means. And in the simplest terms, it is how many times the free cash that flows off your business after all your expenses will pay whatever mortgage you have or whatever loan you have. So if you have $1,000 principal and interest payments in a month, they want to see that at the end of the day, after all your expenses, including a reasonable salary for the owner to be able to live off of, they want that number to be $1,250, which is 1.25 times. Think about it. If you're lower, if you're below 1 to 1, you're broke because you don't have enough money to pay for it. But if you're above, you've got a cushion, and that's exactly what the banks want. So the next one is, what is loan to value? Loan to value has to do with the percentage of the loan as it relates to the amount of the collateral. The banks really want collateral. So with a traditional commercial loan for real estate acquisition of an investment property, they want 25% down and they'll lend you 75%. 75% loan to value. But in SBA lending, it can be higher than that. With business lending, it depends on the type of the business. And it also depends on whether it's a startup, whether it's an expansion, etc. Whether this is something from borrowers with expertise in the business or not. What's your debt to equity ratio? Well, that's a number off your balance sheet that you should know, because if it gets too high, they're going to say you're out of sorts. So, good lender, 5 to 1, 6 to 1, but not 10 to 1. They're not going to give you 10 times what your business is worth in debt in most cases. What's your FICO score? Does it have to be 800? No, but it'd be nice if it had 700. And why is it important? Well, while it's a personal credit score that you need to know about, there's 3 credit agencies that you have to go look at. It represents your willingness and ability to actually have responsibility to take care of finances. And the old saying goes, if you can't take care of your personal finances, how are you going to take care of your commercial finances? And last but not least is, what is equity injection and proof? And that is, where are your bank statements that show you have the money that you need in order to put your equity deposit down to be able to buy or leverage whatever transaction it is. And you have to have it up front, and you have to have it with at least 3 months worth of statements from your bank and prove that you were able to earn that money somehow, so the bank doesn't figure out that it's money coming from illegal activities, etc. All right. So in these days and times, many of you may need to sort out alternative types of financing. And I just threw this page in here because there's a lot of them happening that have nothing to do with what I do in traditional banking or even the small business lending that we do. And it may be of value to you to take a look at that. So when you get the deck, you'll have this there if that's of interest to you. I just wanted to show you an earlier stage kind of solution or just a funding solution, for example, that might make some sense. Because it's all about fitting where you are at any given time and how your business is structured and what the value is and whether you have customers or not, so on and so forth, as to where you are in the cycle of what you can borrow and who you can borrow from. Now, what do we do specifically? So the biggest loan program we have allows business owners who rent their space to be able to buy a building and stop leasing. And that's a really great thing. Rather than pay somebody else's equity, why not own it? And our programs go up to $5.5 million under special circumstances. But really, they start at about $250,000 for our share, which is in general 40% of the value of the total project cost. A traditional bank takes home 50%, and then you as the borrower have to put up at least 10%. And that changes depending on whether it's an existing building, whether it's special purpose, and so forth. But these great loans right now, our position, our 40% second loan position behind a traditional bank, we're at 2.88% fixed for 25 years. And then you have to blend that with the rate of the First Trust Bank, which will be a 10-year loan. That's really an amazing transaction for a small business. Special incentives through September take away some of the fees associated with these loans. So now's a really great time to be able to take advantage of that if you want to buy a place, an office condominium or a warehouse, or just a building to house your own operations, not for rent to third parties. We also manage a fund called the Small Business Growth Fund, which is the SBA's Community Advantage. I call it the baby SBA 7A loan. You can use this for day-to-day operation funding, for real estate transactions, and so on. These loans are from $25,000 to $250,000. They're a little more expensive in terms of rate, and the rate is set based on how we underwrite your loan and what it looks like. But they're going to be up there. We have a micro enterprise loan program that's $25,000 to $50,000, and then for the city of New Carrollton, we have an economic incentive revolving loan fund toward interior, exterior improvements to buildings within the city of New Carrollton, obviously. Our Small Business Flex Fund is an interesting fund. We have loans from $25,000 to $250,000. Program that we administer with the State Department of Commerce, Maryland State Department of Commerce. So this can be used for working capital needs and doesn't require government guarantee and so forth. Bowie has given us some money for lending, $25,000 to $50,000 to give use for working capital, equipment, and those businesses, city of Bowie. Anyone on the purple line that has been impacted negatively by the construction of the purple line, we have a fund for that. We're working with Pepco Exelon. We have a green energy loan program that supports emerging industry in the county with direct loans and loan guarantees or loan loss reserves up to $250,000 to fund energy efficiency improvements in buildings, energy conservation. For those who are involved in creating a lot of jobs, we have our EI fund, and we're talking lots of jobs, not a dozen jobs, but 50, 100 jobs, that sort of thing. And we have a contractors program for them. We do the C-PACE loan program. That's a very interesting program. We look at the value of the property, and if you want to do some energy efficiency upgrades, install renewable energy, water conservation, and so on, then up to 20% of the appraised value, this gets tacked onto your property tax bill when you pay it back over 20 years of doing advertising. So it's something that you can do now. If you decide you want to sell your building down the road, you sell it, somebody else assumes it, but it's a great program for what it's worth. We have the Strive for 35 from Washington Gas Light for companies that are, minority-owned, women-owned, and service-disabled, veteran-owned businesses involved in the natural gas industry. It can be anything involved in that industry. Mount Rainier, that's another program to help that city. And then we have a business expansion fund that we work with Prince George's County Economic Development as well for loans up to $50,000. Both of those programs are loans up to $50,000, as is the Strive for 35. So what's a deal look like for us? This is not a typical deal. This is a pretty complex deal, but if anybody wanted to understand the creativity of what we do, we took a loan, and we probably couldn't do it now in the current marketplace, given the state of hotels and restaurants and those good things. But this was a deal for a brand new construction of Courtyard Marriott in Prince George's County, and you may recognize it. And the total project cost was $25 million. It was 144 rooms. We created 93 jobs here, which was the developer, not us. And the requirement for this was 67 to meet the job creation goal. So that kind of gives you an idea of the ratios. And it met the public policy goal of being minority-owned business. So what we did was we stacked the first trust loan from the bank, which was, I told you, at 50%. So that's $12.5 million. And then the SBA 504 piece, which was at close to 20%, $4.89 million. Then we added the EI fund in for $1.4 million. And through the state of Maryland, that program, $700,000. And the Flex, the VLT Flex Video Lottery Terminal Flex Fund, $500,000. We gave them a $34,000 micro loan. And the owners had to put up $5 million for a total. So those types of things are complicated, but but they're doable, and we certainly have been able to accomplish loans that, because we came in the second position here at 4.8, and the bank was only in at 50%, they figured that if they have to sell this piece of collateral, their risk of getting out is pretty low. To be able to recover their 50%, they think they're in good shape. So that's why we do what we do, to help our economy, to help create jobs, and to help small business owners obtain loans that they might not otherwise get under traditional lending. We're here to help. The picture of some of my partners providing a check to Penny Royal Station, which many of you may know, and picture with me. And at that time, fine gentleman who was on the Senate Committee for Small Business and Entrepreneurship on a day that I testified about small business loan programs, and my contact information. So if there's anything that we at FSC First can do to assist, advise, just sort of give you a brief overview on 5-10 minute conversation anytime, I'm more than willing to have that. My phone number is there. By all means, send me an email. It's probably the easiest way. It's et@fscfirst.com, and I'll be happy to assist if I can. Thank you again for taking the time. I hope this was helpful. Again, I'm Eddie Toothman at FSC First. We're here to help. Take care. Enjoy the rest of this conference.
Well, I don't know about you all, but I would have been fabulous to have Eddie here, but I think he made it feel like he actually was here with us. So I hope that you found that information interesting. And I think we've also demonstrated with our 3 speakers today that we have extraordinary resources for the small business community, literally at our fingertips, and they are all willing to help and highly experienced. So I want to thank everybody for joining us. Crystal, do we have any questions in the chat box that we need to pay attention to?
Yes, there's one. Is there anyone at SBDC that can help me understand my liability exposure if I hire an independent contractor who lives in another country?
That was for Mark.
Yeah, I was thinking about that. I'm not a fan of hiring independent contractors outside of the United States because you don't have any leverage if they don't do the work.
So what I would say, even though she didn't ask the Maryland Women's Business Center, it's 2 things I would say there. One, you need a business attorney who you can talk to about just hiring a contractor in general. And secondly, I would suggest that you touch base with Maryland State Department of Commerce.
Yeah, that's an excellent suggestion because the Maryland Department of Commerce may have some free resources that in the short term, you might make it unnecessary for you to hire an independent consultant. And that way you could kind of learn the market a little bit, learn who some of the players are. But also Angie's suggestion is excellent because they could maybe even help you, I don't want to say vet, but they could maybe help you understand what you should be requiring too of this consultant, because it's very difficult to manage that way across, even with the communications techniques and tools that we've got. It's tough. It's really tough.
Yeah, but at least, they'll be able to guide you in regard to boots on the ground in that country where you want to hire. Mm-hmm. So I would definitely suggest that you touch base with Maryland State Department of Commerce, who may be able to put you in touch with SBA's Department of Commerce. So it's the departments of commerce that you really should be talking with as well to help you manage the boots on the ground in that country that you're interested in hiring from.
Right. Yeah.
Well, we also do have, Angie, and I didn't think about this right away. We do have Gabe Armour, who is our in-house import-export expert that's certified in referrals. And you might want to get in touch with Gabe. Gabe is out of Baltimore. And I don't have his number off the top of my head, but if you reach out to me and I'll send you an email back. If you send an email to mwells14@umd.edu, I'll send you his contact information.
Thank you, Mark. Thank you very much. Any other questions, Crystal, that we've got?
No, that's all.
Okay. Well, we have enjoyed having this time to kind of review what some of the options and resources are for small businesses. I am happy to send I actually have Eddie Tubin's presentation as a PDF, so Crystal can send those presentations to all of our registrants so that you've got them to review. This recording will be posted on our website. And if there are no more questions, then I just want to say a huge thank you to Mark and Angie. I will talk to Eddie separately, but we're delighted that you all could join us. And BuoyBIC is a resource as well, so don't hesitate to reach out. Don't get discouraged. There's lots of people who are invested in the success of our small business community here in the city of Bowie and in Prince George's County.
Absolutely.
Thank you all very much. And I
Okay.
think with that we will conclude this session.
Bye-bye.
Bye
Talk
now.
to you later. See
Bye.
you later, Mark. Bye.